right, welcome back. It's time for more of this morning's bull run. And in case you haven't been paying attention, Bitcoin dropped below 90K yesterday, its lowest point in more than 6 months, reminding everyone that volatility still exists when number has mostly been going up. Analysts blame the drop on the holy trio: profit taking, shrinking liquidity, and macroeconomic pressure. BitBull Capital says long-term holders have been selling into strength and liquidity has dried up, meaning even medium-sized sell orders now hit the market like a truck. Tighter financial conditions and rising credit concerns have pushed investors out of higher beta assets. And yes, that includes Bitcoin and is still considered a higher beta asset no matter how many times we yell digital gold into the void. Now, some analysts are warning that Western governments are running huge deficits while the stock market depends heavily on AI-exposed companies. About 40% of the S&P 500, which is only a tiny bit terrifying. Now, if the AI boom requires massive credit financing before revenue actually arrives, that pressure spills into every risk asset, including Bitcoin. So BTC dipping to 90K isn't some catastrophic collapse. It's a combination of macro stress, weak liquidity, de-risking, and whales cashing out. And joining us today to talk about this and a couple of other stories, we got Anton Bozhov from Xapo Bank and Sam Callahan from Oranhe BTC. Gentlemen, welcome back to the show. Great to see you both this morning. How are you?
Back on.
Excited to be back.
Yes, excited to have you both here. I hope you've been doing well. I want to get right into it. Sam, let's start with you this morning. When Bitcoin suddenly drops below 90K, a lot of people are starting to panic. Based on what we're seeing now, does this look like normal market behavior or is something deeper happening underneath the surface?
Yeah, well, thanks for having me back on. And yeah, it's pretty par for the course for Bitcoin to have corrections of 25 to 30% during any kind of bull market. The last time this happened was during the tariff announcements back in spring. So this is kind of par for the course. Sentiment's in the gutter right now, I understand. But for long-term investors, this is actually a buying opportunity. And, under the surface, we have been seeing some long-term sellers taking profits. But that's also normal during bull runs. And the people buying them, that's the difference. Because instead of other retail investors buying, we have institutions, we have governments, we have sovereign wealth funds, pension funds. And so this is the asset maturing. We're going to see this distribution happen. But long term, if you look at the macro picture and global liquidity conditions, there's every reason in the world to be bullish on Bitcoin's long-term value proposition as a hard, scarce asset in a world of high fiscal deficits and persistent currency debasement. And so nothing's really changed. The governments are still going to print money. Bitcoin, there's still only 21 million that's ever going to exist in the world. So I think now's a pretty good time to pick some up if you believe in that.
Yeah. And Anton, for you, Bitcoin's down about 25%. We've seen much bigger corrections in the past before, yet everybody is freaking out. The fear and greed index, I think, was at like 10 this morning. Do you think that this recent pullback is kind of indicative of the different playing field Bitcoin is on now, especially with all the institutional money jumping into the market in the last year and a half?
I think, Hank, it's very normal. What's happening right now, it's a structural reform on the Bitcoin. Did you see what happened a few days ago from Galaxy? They announced that they sold $9 billion in Bitcoin for only one customer. $9 billion. Now,
Whoa.
Imagine this person trying to sell their holdings 10 years ago when the Bitcoin was below 1,000. It's impossible. This liquidity didn't exist before. So right now, those OGs are selling. And someone made a very good comparison. It feels like right now, Bitcoin is on his IPO moment, where the OG, the early investors right now are redistributing their holdings to the institutions that are also long-term holders. So yeah, we are in the Bitcoin IPO moment, and that's very normal. And I think this is extremely bullish for everyone right now. I cannot be more excited.
Yeah, no, I would have to. Yeah, people have been riding the Bitcoin wave for a while, and life happens. You need money, and some people got to cash out, but it looks like they're cashing out directly into the hands of institutions. But with that being said, and Sam, this one will be for you. Some analysts right now are saying that Americans have kind of pulled back. We're seeing ETF outflows, lower demand, even a negative Coinbase premium. How much do you think U.S. sentiment matters in a global market now dominated by institutions?
Well, the U.S. is still the leader in Bitcoin in pretty much every metric. that I see. So in terms of mining, in terms of the companies that lead in the industry, in terms of the infrastructure, in terms of the liquidity, in terms of the usage. I mean, Bitcoin America has been a leader in Bitcoin, and so they still are a leader. They still influence things. I reject the idea that they're taking a step back. I feel like we're leaning in hard, and the only thing that's taking a step
Okay.
back is the price. So the fundamentals continue to improve. I mean, we just saw Harvard triple down with their endowment on Bitcoin, and so
Right.
IBIT's now their number one U.S. equity position in their entire portfolio, and so that's a signpost.
Yeah.
You saw sovereign wealth funds. So America's leaning in. We're working on a Clarity Act now, and I think that's going to get done maybe probably longer than people think, but eventually I think it'll get done, and that'll even provide more regulatory clarity for more people to get in. But a lot of Americans, their wealth is managed by financial advisors, and that's just the reality of how the markets are structured today. And those RIAs, those large firms, they're still like seeing how these ETFs are trading, seeing how Bitcoin's fitting in portfolios. It takes them a long time to allocate to a new asset class. But we've seen in the last 12 months, we do have the liquidity now. We do have the regulatory clarity. We do have it's the custody solutions available to them where they can feel comfortable allocating their clients' assets to this. And I think that just takes time. I think Americans and maybe all people are very impatient these days. But the key is just to be patient.
Yeah, no, Sam, those are all really good points. It's like if you look at the underlying narratives in the Bitcoin space, there's a lot of really bullish news there, but it kind of feels like maybe Bitcoin's getting dragged into a lot of the macro chaos we're seeing right now. So I think you're totally right. Just the only thing that's down or taking a step back is the price right now, but we've seen this from Bitcoin before. So like you said earlier, this is just kind of par for the course. We'll move on to the next story, guys, here. As ARK Invest says that Bitcoin's ownership base is basically going through puberty, awkward, dramatic, and full of big changes. They are calling 2025 a battle between early adopters and institutions, which is finance speak for the OGs are selling and Wall Street is buying everything not nailed down. Now, long-term holders have been taking profits, and Bitcoin's liveliness metric, which rises when old coins finally move, is now 0.89. That's the highest level we've seen since 2018. That means wallets untouched since the Obama administration are finally waking up. Now, ARK says it's a structural transfer of supply, and the macro backdrop matters here. Institutional appetite depends heavily on dollar liquidity and interest rates. If tightening ends and rates fall, ARK expects ETFs and corporations to keep stacking. The big takeaway here, if liquidity improves, institutional buyers could keep overpowering early adopter sellers, which could quietly extend this bull run into 2026 without needing Michael Saylor to personally intervene. This next one, Anton, ARK says that Bitcoin is going through a major shift. Early adopters are selling, institutions are buying everything. How big of a change is this for Bitcoin's long-term story?
Actually, it's not changing a lot, Hank, because at the end, investors are still stacking Bitcoin. Yes, some OGs are selling, but I can assure you that selling all of their Bitcoins. And Hank, also, the Bitcoin is that you can see everything on-chain. And what's happening right now, approximately $2 billion are sold pretty much every day from OGs. That's clearly the on-chain data. And the beauty of the entire situation is that this has been consumed quite well from institutions, from ETFs, and from Bitcoin treasury companies. The fact that we have these unbelievable sell volumes happening every day, and the fact that we were not that low from the high, like 20% correction, is pretty much very normal for the Bitcoin. And I can tell you that this sell pressure will stop at some point, and the investors right now that are acquiring those Bitcoins, they're here for the long game, and they will not sell any moment soon. So that's what I told you earlier. We are in this Bitcoin IPO moment where the new investors are here to stay. And this structural transfer, yes, I agree, it's happening, but at the end, it's bullish because you don't have speculators here. Those new buyers, they're not here to speculate and sell tomorrow or next month. They're here for a very, very long game, and that's why I'm saying having Bitcoin in long term is the great, probably the best investment, and nothing is really, really changing for people who believe in the Bitcoin revolution, I'd say.
Yeah, no, that makes sense. We've seen a lot of institutional action in the last year and a half. In fact, institutions now hold more than 2.3 million Bitcoin through ETFs and corporate treasuries. So, Sam, how does this change the way Bitcoin behaves during bull and bear markets? Are we currently seeing it right now with this 25% drawdown as opposed to some of the bigger ones we've seen in the past?
Yeah, I think that's kind of what I expect to happen in terms of the behavior of the asset. When the investor base changes to a more retail to institutional, you know, there's professionals, and so they do hedging strategies. They also do rebalancing when it goes up and down. So the effect is that it typically dampens volatility. And so even this year, last year, Bitcoin was less volatile than Nvidia and Tesla, and it was almost
Yeah.
2, 3 times more liquid of an asset because it's a globally traded 24/7 asset. And so it's always going to be very volatile, but it's very, very liquid. And so it's usually the first thing that sniffs out when something's going to happen in terms of liquidity conditions, macro. You kind of saw that the last 2 weeks when Bitcoin sold off before stocks started to crash. And so, in a lot of ways, Bitcoin won't be changed at all from the institutional adoption, but its price behavior, I think, will as it matures. And I think that's a very normal thing. And I think when these early investors start to sell, I don't see it as a sign like, hey, they've lost faith in Bitcoin long term. It's actually that they benefited from being early adopters, and Bitcoin's working as money. It's supposed to preserve value and purchasing power over time. And as Anton said, when one holder has $8 billion, that's because Bitcoin, he made the right decision. He held on to it, and Bitcoin worked as money, and he benefited from it. We don't value money for money itself, but for its prospective exchange utility, basically to buy us things in the future that we want. And that's just the nature of money and the nature of humans. And so it's diversification. It's people maybe going on that trip and living their lives, buying the college education for their kids. I mean, it's very normal behavior. And so I don't really see it as a negative. I see it as a positive and actually a validation that Bitcoin's working as intended as the best way to preserve value over the long term.
Yeah, no, it definitely seems like we're seeing Bitcoin kind of mature in front of our eyes right now. And Anton, ARK is saying this whole trend depends heavily on liquidity rates, or interest rates, and liquidity. So if the Fed starts cutting rates again, do you think institutions are going to start buying even more aggressively than we're seeing right now?
Absolutely. Right now, there is this risk of sentiment, which also was visible from the tech stocks. They're very down in the past few days. Investors are assuming the trades as they said they would. So this is one of the reasons why we have this Bitcoin. One of the reasons why we have this Bitcoin price decline. But Hank, if we see what happened in 2018, I saw, generally speaking, crypto looks like a scam, and this caused the bear market. 2020, we had COVID, massive event. 2023, we had the FTX crash, again, like a massive event. What happened now? Nothing, like literally nothing. You don't have the driver to enter a bear market. So this is like a very normal correction. I'm sure it will happen again. And if someone cannot survive 25% correction, then you're not in the right place. So, yeah.
Right. No, that makes a lot of sense. And, we are seeing this big transfer right now, as we spoke of earlier, from early holders who are finally cashing out to institutions. Now, if this transfer were to continue, Sam, what kind of market do you think that creates in 2026 and beyond for Bitcoin? Are we looking at a more stable, slow up and to the right, or could it be more explosive, something in between? Where do you think we're headed next?
Well, it's important to note that global liquidity conditions are the long-term driver of not just Bitcoin, but all asset prices. But Bitcoin's the most sensitive to the liquidity conditions. And so we have these supply side dynamics occurring right now, but eventually there will be seller exhaustion and the distribution will happen. And then liquidity will continue to be the driver of the long-term price action. And so I expect this to play out over the next few months. But at the same time, when you look at what's going on the liquidity side of things, there are signs that there's some cracks starting to happen, and the Federal Reserve and the government starting to move some chess pieces around to try to provide more liquidity to the system. You see that with the way that they're thinking about changing the bank requirements. You see that with the Fed ending QT next month and starting to reinvest into T-bills when the bonds mature off their balance sheet, and that provides liquidity to the system. And you see some of these dynamics. You saw the spreads between the bank funding rates are starting to spike, and there's concerns. And I think like Donald Trump called a meeting with some of the Jamie Dimons of the world, Steven Schwartzmans of the world, and they got together and they said, hey, we're worried about the cost of living here. What can we do? But I think behind closed doors, it was also about, hey, what's going on with the liquidity conditions? Because if we have to return back to easy monetary policy and inflation rates still at 3% CPI, and the Americans are already struggling with the cost of living, how do we manage this? Because we have to provide liquidity to the system. We can't let things crash because debt's at 38 trillion and we need to run $2 trillion deficits. But we have a cost of living crisis and we don't want people with pitchforks in the street. So what can we do? There's talks of $2,000 stimulus checks. There's 50-year mortgages. They're trying to figure out how to keep the system afloat. And for Bitcoiners and maybe gold bugs, we know where this is headed, which is currency debasement. And so they can try to play these games and try to delay things and toggle some switches, but we know what's ultimately going to happen. And they're going to provide liquidity. They're going to try to keep the system afloat. They're going to abandon their the price stability mandate. Once again, cost of living is going to continue to be high. And as the cost of living is high, Americans will continue to struggle and they'll seek alternatives naturally to preserve their wealth. And so long-term Bitcoin, like over the next 3, 6, 8 months, it depends on liquidity, but I see that increasing. And in that environment, since Bitcoin's so scarce, we can't see an explosive move upwards. It would be actually abnormal for Bitcoin to just grind upwards. That would be the weirder thing to happen when you look at Bitcoin's historical price action. So expect anything, but really the long-term value proposition, it's not changed at all.
Okay, yeah, no, I'm glad to hear that. And I know you and I are going to get in a little bit deeper about the liquidity situation in a bit, so I'm excited to talk about that. But we're going to move on to our next story now about El Salvador, because they just picked up another just under 1,100 more Bitcoin worth about $100 million, because apparently dollar cost averaging is now a national policy. And honestly, respect. I mean, Bitcoin slipped and El Salvador said, we'll just take the whole tray. Now, the nation has had Bitcoin as legal tender since back in 2021, and their entire strategy seems to be when the market dips, buy more. When it pumps, also buy more. And when people say it's risky, let's just buy even more. Their latest purchase brings their total stash to just under 7,500 BTC, valued at roughly 688 million. And moves like this strengthen the narrative that Bitcoin is evolving from weird internet money to an asset gobbled up by governments who want to escape hatch from the dollar dependence. And the more countries that follow El Salvador's buy the dip forever strategy, the more structural demand you get supporting the price long term. So yeah, the chart might be bleeding today, but a country is literally looking at that and going, thank you for the discount. And if that doesn't tell you where this is all headed, well, I don't think anything will. Bring in my two friends back. Anton, this one's for you. El Salvador brought over 1,000 Bitcoin during the dip. That's more than $100 million worth. What do you make of a country treating every dip like a buying opportunity?
El Salvador is giving example to other countries what they also should do, and I'm sure they are taking notes. See, Hank, it's taking a lot of time for others to really understand the value of Bitcoin, especially if you're speaking on a national level. There are a lot of policy happening on different countries. I can see also here in Europe, you have some countries like for example, in Romania, which this has been broadly discussed, but someone needs to press the button and say, yes, we're going to copy El Salvador. The El Salvador, they're just very lucky to have their president, because what they're doing, this is like actually a long-term strategy. See, they managed to attract a lot of Bitcoiners, a lot of digital nomads moving to there, and also at some really good companies. Like you can see Tether, the most profitable company in terms of employees versus income, they opened their headquarters in El Salvador. So this is actually a much bigger strategy than just buying Bitcoin and holding it. And it's like what I'm seeing, it's going to take time, but they're the first one, but they're not going to be the last nation in the world to do this one.
Yeah. It certainly seemed like just seeing someone else do it, nobody wants to be the first, right? So it almost kind of gives permission to other countries, maybe of a similar size, to be like, hey, maybe we should join in on this party too. And so, it might be that the catalyst for that. And Sam, one thing that's interesting about this is, I could have swore that El Salvador made a deal with the IMF this year after, I think, getting a loan or something where they weren't going to buy more Bitcoin. But it would seem like a move like this is directly challenging the IMF and traditional financial systems. So do you think more countries might eventually follow El Salvador's lead, even if it's kind of quietly behind the scenes?
Absolutely. I mean, there's no doubt about it because every single country suffers the same problem, which is currency debasement, which is how do you preserve wealth over the long term? And how do I seek a neutral, apolitical reserve asset, other than gold? What do you really have? You have Bitcoin. And so I agree with what Anton said. El Salvador is very different, though. They're like embracing Bitcoin from like a cultural perspective and teaching and
Right.
education and trying to rally behind Bitcoin rather than just like diversify reserves. And that's a very special thing that's happening down there. And I hope more countries replicate that because as we know from like an individual perspective or even a corporation, Bitcoin can transform a person, a household, a corporation, as well as an entire nation, as El Salvador is showing us. But in terms of the IMF, I mean, the IMF is basically monetary colonialism, creating uh, debt slaves of countries for decades and decades and decades. I did a lot of work researching this stuff. And so, of course, the IMF doesn't like this because it allows the country to take back their sovereignty. And that's one of my biggest gripes with the IMF is they infringe on the sovereignty of nations and tell them what to do
Right.
from an economic policy standpoint and really give them a lot of bad debt that they have over their heads for decades that slows their way to grow into prosperity. And so Bitcoin is a way for them to opt out of that IMF cycle. And so it'll take time for countries to wake up to even how Bitcoin does that. But El Salvador is a shining light of an example of how they can do that. So I don't really know the specifics. There's a lot of rumors about the IMF restricting them from buying it, but then they were still stacking. And there's a lot of rumors of how that was happening and whether that was even true. And so I'm not really sure about the specifics there, but it's really good to see them having the conviction to continue to buy and say, hey, no, we're a sovereign nation. We can do what we want with our tax revenues,
Right.
and we choose to buy Bitcoin with it.
Yeah, no, that makes a lot of sense. I mean, now they hold like 7,400 Bitcoin. And Anton, from a banking and treasury perspective, what does it mean for a nation to build reserves in Bitcoin instead of traditional assets?
It's giving opportunity for this nation to ensure their national currency is going to be fully protected against inflation, to be fully protected against debasement. So I think this is one of the next logical steps for El Salvador, just to connect their national currency to be linked to the Bitcoin. I know this is a massive one and is going to require some structural changes on their end, but I think this is coming. And I bet this will happen in the next few years. But from the bank point of view,
Yeah.
bank we have discussions. I cannot provide the full the story, but we have discussions with some other countries that are interested in also storing Bitcoin and having banks having Bitcoins there. And if we wait a few months, I'm sure the news are coming.
Yeah, no, that definitely seems to be the way it's going. We don't know officially, but unofficially, I think we all kind of do. And officially, though, I want to say, Anton, it's always a pleasure having you here on the Blockchain Report. Thank you so much for joining us today. And if people want to learn more about you or what you and the team at Xapo are up to, where can I send them?
Please send them to X, where they can find my profile. And Hank, it was a pleasure. And hopefully see you soon. Thanks, Sam. Thanks, Hank.
Yep,
Bye-bye.
pleasure's all mine. All right, now we're getting into our deep dive with Sam. So guys, let's roll the stingers and get into it. All right, now it's time for our deep dive with Sam Callahan. We got a lot to talk about with you, Sam. A lot of time has passed since we had you on the show, but the first thing I want to jump into is you had a really interesting tweet that recently came out, and I want to talk about that because in your tweet, you said that people were overfitting the relationship between Bitcoin and global M2. So for viewers out there who don't follow macro charts every day, can you explain what overfitting means in this context and why it leads people to the wrong conclusions about Bitcoin?
Yeah. Overfitting. So look, there's a broad macro relationship between global M2 and global liquidity and Bitcoin. We kind of talked about this earlier in the show, right? The problem is it's a broad relationship that changes. And I noted when I did a report with Lynn Alden that that correlation can diverge multiple times when there's large events that happen to Bitcoin itself, right? So you have the broad macro liquidity, but then you have Bitcoin itself. And so a perfect example was during like the FTX collapse. That was unique to Bitcoin. It didn't matter if the Fed was cutting rates or hiking rates. Bitcoin was tanking because there was industry specific events happening that override the liquidity conditions. Another one was the launch of the spot Bitcoin ETFs, a more positive one, where that opened up access to this new industry. A lot of money flowed in there. That was unique to Bitcoin. So it didn't matter really what liquidity was doing then. Bitcoin was going to rally pretty hard. And so there are moments when it diverges. The problem with overfitting, people were taking that broad relationship and saying, well, global liquidity is up like this, and it's typically like a 10-month lag between Bitcoin. And so why isn't Bitcoin catching up to global liquidity? It's about to spike and all these, they're trying to turn it into like a precise timing indicator instead of just a broad global macro relationship to learn from. So like it's more about the environment that you're in of when liquidity conditions are very good and they're easing. It's more likely that Bitcoin's going to be rallying during the period based on its historical price action. It doesn't mean that like because global liquidity went up like this, that Bitcoin's going to go up like that. And then there's also these different dynamics between how global M2 is reported. A lot of times it's reported on like a quarterly basis in some countries and it's monthly in others, and where Bitcoin is priced every single minute, right? So it's overfitting that relationship. And so that's why a lot of people were disappointed because they were looking at global M2 and they were like, hey, Bitcoin's going to rip because look at global M2, but it's just like you're overfitting it, if that makes sense.
Yeah, no, I think I'm starting to get this a little bit. And some analysts are saying that the correlation you speak of is quote unquote broken, but you push back on that idea. So my question is, like, what signs do you look for to determine whether a macro relationship is truly failing versus simply going through a normal divergence?
Well, if this continued for a long period of time, where global M2 just went straight up and then Bitcoin lagged below for years, then yeah, I would have to revisit my thesis and say, hey, this relationship isn't working or isn't what I thought it was. But that's really not what's occurring now. It's just like a short term
Okay.
divergence, which is pretty normal. Like I said before, there's other periods where it's happened, but generally, Bitcoin does well when the governments and central banks are providing liquidity to the system, and that just makes sense. It's a very it's the cleanest way to express currency debasement. If you're a money manager, or if you're an investor, and you say, hey, I think they're going to keep printing money, Bitcoin's like probably the purest way to play that. And that's what the data shows. Now, if that changed and it was like years where they were printing money and then Bitcoin was doing nothing, then I would be like, okay, something's going on. Like something either happened with Bitcoin or something happened where that relationship has changed. And I would have to kind of investigate it.
Yeah, that's fair. And if someone wanted to understand better how macro liquidity actually influences Bitcoin without falling into these kind of timing trap models, what frameworks or signals do you personally find the most useful today?
Well, the frameworks in terms of just how liquidity drives Bitcoin's price, is that what you're asking? So
Yeah,
generally
essentially.
speaking, like risk assets perceived as like risk assets are more correlated with liquidity conditions. And so
Right.
today, I think Bitcoin has safe haven characteristics and people are waking up to that, but it's broadly still seen as a risk on asset. And so typically equities, Bitcoin, more risk on assets do well in pro liquidity environments. And now if you think about what happens when liquidity gets pulled from the system, people flee to safety, right? They flee to the dollar, right? Historically, or to
Right.
bonds, or even to gold. And so they don't have as pure of a relationship with liquidity as Bitcoin for that reason. And they also like US equities, yes, they're risk on, but there's also like there's structural buying with US equities through like passive flows. So like 401ks and retirement accounts. And so even when liquidity is getting pulled out of the system, those passive funds are still buying equities. So they're not as tightly correlated to liquidity either because they have that passive bid even in the downturns. And then gold is kind of both. Gold is seen as like a scarce asset and a debasement hedge, just like Bitcoin, but it's also kind of seen more as a safe haven. It has thousands of years to back that up. And so investors kind of flee to gold in when liquidity gets pulled from the system. And so again, it's kind of inversely correlated to liquidity that way. But Bitcoin right now, if liquidity is going up, it tends to go up. If it goes down, it tends to go down. And that's just the dynamics at play. Whereas gold liquidity relationship's more mixed, Bitcoin's is more pure. And so that's why I say it's the best global barometer of liquidity conditions. Hopefully that answered your question.
Nice. Yeah, no, I appreciate you explaining that from my tiny mind. I'm not into this part as much as you guys, so it's really good to hear it from the horse's mouth so I can help try to grasp my small brain around that. Now, I want to switch gears a little bit, Sam. You have had a recent change that I would love to talk about. You already have had a pretty impressive career journey, doing deep research at Swan, moving through roles in finance at Battery, and now you're running Bitcoin strategy and research at Orange BTC. I gotta ask, what made you feel like now is the right moment to take on this new role?
Well, it comes down to the fact that I was really inspired by what Michael Saylor and Strategy were doing in terms of the business model of a Bitcoin treasury company. Really, when you break down what a Bitcoin treasury company is doing is public companies have better access to debt. And that's just a function of the system. Whereas like if I'm Apple and I have a huge balance sheet and I can get better terms from a bank, I can get like really low cost, long duration debt. If I'm like a person, I can't do that. But corporations are closer to the money printer, and so they get better terms. And so the same thing with the Bitcoin treasury company, since we have a large balance sheet of Bitcoin, we can also raise capital that's very long duration, low cost, and buy more Bitcoin with it. And so it's almost a way to both provide leverage exposure to Bitcoin in the public markets, but also improve accessibility to Bitcoin because there's large institutional investors, large pools of capital that just can't buy spot Bitcoin. Even if they wanted to, they just can't. There's investment mandates, there's regulatory restrictions, and we're talking about like almost $100 trillion that can't buy spot Bitcoin. But they can buy Bitcoin-backed securities, right? They can buy debt, they can buy equities. And so that exists in Brazil. So Orange BTC is the largest Bitcoin treasury company in Latin America. We're listed on B3 in Brazil. And that those dynamics exist in Brazil where there's pension funds, insurance companies. They simply can't buy spot Bitcoin, but they could buy a domestic equity like OBTC3. And so there's a lot of opportunity there. And so there's opportunity also in Latin America just to teach people about Bitcoin. We talk about currency debasement a lot on this show. Well, Latin America knows a lot about currency debasement, and they have a lot of unstable currencies, and it's almost troubling, and they need solutions. And the education level around Bitcoin there, I'd say, is a few years behind maybe the United States. And so there's a huge opportunity there to be a leader in that region when it comes to being a Bitcoin-focused public company that's providing education as well as improving accessibility there. And that's our goal at Orange BTC.
Nice. Well, it sounds like a hand-to-glove fit given your experience. And just so I'm getting this right, is it Orange BTC? Because I've been saying Orange. I thought it was like the Spanish pronunciation. I just want to make sure I'm saying it right.
It's Orange BTC, but you're not the first to do it, so don't feel bad.
Okay. All right. I appreciate the leniency of that one. But like I was saying, seems like a great fit for you. I mean, you've spent more than, 3 years at Swan. You went from Bitcoin analyst to lead analyst to senior analyst, and you're hosting Swan Signal Live. How did that experience shape the way you think about Bitcoin strategy today, and how does that feed into the work you're doing at Orange BTC?
Well, it was a great experience. I mean, we saw a lot of growth there, and my job there primarily was to teach about Bitcoin, to teach our private clients and our institutional clients about what Bitcoin is. Back in 2020, 2021, 2022, again, that was 3 or 4 years ago. The amount of educational resources and the general understanding of Bitcoin today is like night and day compared to then. So, it taught me a lot about how to explain Bitcoin to people, how to meet people where they are. obviously writing and speaking and all these things. So I take a lot of what I learned at Swan and I apply it here. And then, it's just kind
Yeah.
of taking that and then moving now to the public markets. And there's a lot of differences between a private company and a public company that you learn, but it's the same thing, which is like we are just driving Bitcoin adoption. It's, I've had the same
Hmm.
mission. I changed careers to work in Bitcoin. It's always about Bitcoin. Like I want more people to understand it. I want more people to own it. I want more people to protect themselves with it because I really believe that is the best way to preserve wealth long term. And I still think it's very early. And it just shows, and like my work kind of shows that because people still don't understand it. And so I'm just doing what I can. I'm just with my skills to drive Bitcoin adoption forward and playing that small part. And it's what keeps me going. That's the mission.
Yeah, I love that. And it's so important in this space, as you and I know, to have educational stewards helping drive information amongst the masses so people can understand this better. Because as I've seen time and again, I've had hundreds of people on this show, and it's always the same story. I thought it was a scam. I stayed away from it for a while. Then I did the research. I educated myself, and now I'm all in. So it's so important that we have people who are helping helping other people navigate that change of thought, because it really is. It's not just, I don't believe in the dollar anymore. It's just like a fundamental change in people's mind shift. And, before joining Orange, you had a stint running as vice president at Battery Finance. So my question to you is kind of along the lines I mentioned earlier, like what did you learn from that traditional finance environment that you felt was important to bring back into a Bitcoin only company?
Well, I mean, Battery, Andrew Hones, he's just a brilliant guy. And so what
Mm-hmm.
we're doing there is building Bitcoin structured products, combining traditional
Mm,
credit assets with Bitcoin.
yeah.
And so you can kind of see that there are some similarities between what Michael Saylor is doing with the preferreds and what they're doing at Battery. It's such an
Hmm.
early days when it comes to Bitcoin-backed credit products. And the opportunity
Right.
there is immense because some people, like I said, there's the investment mandates and the restrictions that prevent people from owning spot Bitcoin. But some people just want certain things, right? They want a little income, right? They want a little downside protection. They don't want like the entire vol. Like they want a piece of real estate, but they also want Bitcoin involved with it too. And so if you combine the two, it
Hmm.
makes the economics really interesting for the lender and the borrower because you're adding this diversified piece of collateral that is fungible, that's liquid. Like, when you try to sell a piece of real estate, it takes a long time. It's illiquid. You got to find a buyer for that exact property. It's not like you can sell off a piece of the property, but when you have Bitcoin combined with it, it makes it really interesting. So, the things I learned at Battery was is how the institutional investor thinks, how to meet their needs, and how Bitcoin can be combined in these structured products to make really, really enticing financial products for these institutional investors. And so I'm applying what I learned there at Orange as well. So, both of my stops really have taught me skills and experience that do me well at Orange.
Yeah, no, that's super cool to hear. I mean, we're seeing a lot of these kind of Bitcoin Frankenstein's monsters products of traditional financial systems and Bitcoin getting integrated together. The one that comes to mind is, I'm sure you're familiar with, like Cardone Capital is doing that with these large 300 unit buildings, and they're also attaching like millions, tens of millions of dollars of Bitcoin to it as well. And I had a chance to talk to Grant about that, so it seems along
Nice.
those lines. And Orange hired you as director, as we mentioned, of Bitcoin strategy and research. It's a big, high impact position. So, what's the mission you were brought in to execute at Orange, and what does success look like for you inside the company moving forward?
Well, we're a Bitcoin focused company and we're on the Bitcoin standard. So like we measure all of our KPIs in Bitcoin terms. Bitcoin is our unit of count. So, we're measuring our
Hmm.
success based on metrics like Bitcoin per share and Bitcoin yield. How can we accumulate more Bitcoin on behalf of our shareholders in an accretive way? And so that's my number one
Hmm.
measurement. The other one's more anecdotal, which is just like, are we driving Bitcoin adoption in Brazil and Latin America? Like, is the education getting better? Are the resources getting better? And that's why there's like two
Hmm.
strategies, which is like director of strategy, or two titles, director of strategy and research, because I'm kind of doing the education side of things, but then actually working with our treasury team. How do we generate more Bitcoin for our shareholders? How do we acquire more Bitcoin for our shareholders? How do we are different yield strategies that we can do? And so it's kind of the treasury operation side of things, and then the education and research side of things that we're focused on, and we measure everything in Bitcoin terms.
And, with this new role, it sounds like it involves you helping organizations build and manage Bitcoin treasuries. So what do you think a Bitcoin treasury management is going to look like in 2 or 3 years from now? And how is Orange preparing for that shift? Because I got to imagine what we're seeing now very well could be very different in just the next 2 or 3 years. Things change fast.
Yeah, I think there's different types of Bitcoin treasury companies, I guess you could say. I mean, there's companies that are just operating companies that take, their retained earnings and just buy Bitcoin with it on their balance sheet, which is completely fine, which is a completely rational thing to do. And there's other ones that incorporate Bitcoin into their businesses, right? We just saw Square launch, the payments, Bitcoin payments, which was awesome development. So now small businesses can just incorporate Bitcoin payments, and then they could acquire it on their balance sheet, and that's awesome as well. Bitcoin treasury companies, in the way I think about it, like Orange BTC, we're like systematically raising capital to acquire more Bitcoin on behalf of the shareholders in a creative way. So it's more of an offensive strategy, I guess you could say. And we're basically, our product is those financial products that we give them. Right now, we have the equity, which is OBTC3. We have one convertible note, and then there's other plans in the future to develop more financial products. And then, there's just very interesting things like, how can a treasury evolve over time? Well, we have a large Bitcoin treasury, and we think it's the best treasury asset that you can own, that's going to compound at 30% plus a year for the foreseeable future. That's one of our beliefs. That's where I'm in agreement with Saylor. And people are like, well, where does the 30% come from? And I'm like, well, if you look at Bitcoin's rolling 4-year CAGRs since 2012, per se, the 10th percentile is 30%, meaning 90% of the time, Bitcoin's 4-year rolling returns was better than 30%. And so when we say 30%, and even the last 5 years, it's like 45%. So when we say 30%, it's actually, crazy enough, a conservative projection for Bitcoin just based on its historical performance. And so if we own a treasury that's compounding to that size, we are going to grow just from that appreciation. We're going to grow into a market cap of one of the largest companies in Brazil. And then when we have that capital, that pristine capital, there are so many things we can do. My experience at Swan and across our board, we have deep experience in capital markets and financial services and Bitcoin financial services. And as I said, in Brazil, the market infrastructure there is not like the United States. It's just, there's not that many places to buy Bitcoin, to custody Bitcoin. They need more. They just need more of everything. And so we're going to take that experience in the future, and we're going to decide, are there lines of business that we could incorporate, just because we have a large treasury of Bitcoin, where we could provide some of those financial services, and then we can provide those financial products that improve access. And all of it is just going to drive Bitcoin adoption. And that's the mission, right? And so, in the future, look out 2-3 years, I think the treasury companies are going to be some of the largest companies in the world if they can manage risk well and be intelligent about any leverage they take. There will be some that blow up because the management team didn't do the right thing, but there will be some that are very successful, and they will grow to become one of the largest companies. And then they will have all this optionality to drive more value for their shareholders through financial services, financial products. And so that's how I see this playing out in the next few years. Volatility is still going to be there, but it really comes down to doing due diligence and analyzing each of these treasury companies based on their own market, based on their management team, based on their balance sheet and capital structure. Do your research, because they're not all equal. But the ones that execute are going to be in a very interesting position in 2 to 3 years, because ultimately it's a leverage bet on Bitcoin. And so if we're right about Bitcoin, these companies are going to be pretty successful.
Yeah, no, I mean, it kind of sounds like, if things go the way that you and I both think, the world will be your oyster. And I do think, yeah, it'll come down to kind of not all stewards are created equally. And there's some really great ones out there, the Michael Saylors, the Joe Burnett's, yourself. And I think there's going to be a lot of people that do really well in this space, but that doesn't necessarily mean that's going to happen across the board just because everybody's a little bit different, right? But with that being said, it has been an absolute pleasure having you on the show again, Sam. It's always a great treat getting to chat with you and getting to learn more about your insights and expertise on the space. And I'm sure you've gained a lot of new fans today. So for those that haven't already gotten to connect with you, what's the best place I can send them to get more of your hot takes on X and where they can learn more about what you and the team at Orange BTC are doing?
Yeah, and thanks for having me again. I'd love to come on anytime, and you guys are doing great work.
Thank you.
You can go. I'm on X, so I tweet out thoughts, I tweet out analysis, charts, and so you can find me at Sam Callahan, SamCallah, and you can also, my DMs are open. I leave them open on purpose, so you can reach out if you want to talk. And then also orangebtc.com, and we have a treasury dashboard up there where you could see, exactly. We're very transparent about our Bitcoin holdings, our BTC yield, all our different KPIs, as well as our balance sheets on there, as well as our historical purchase history. And so it's all on there. We have some educational resources. I wrote a paper, a primer on the Bitcoin treasury model. You can find it on there as well. And we have another one coming out, more Bitcoin 101 report. Both of our stuff's in Portuguese and English. So go check it out. And thanks for having me on the show.
Yeah, it's an absolute pleasure, Sam. And everybody, you heard it here first. Sam said to slide into his DMs, so you're going to be getting some fun messages, Sam. And we certainly appreciate all of your messages here with us on the show today. So I hope you have a great rest of the week, and thanks again so much for joining us. It's always a real pleasure.
Thank you. Have a good day.
Cheers. You too. All right, we're taking a quick break here at the Blockchain Report, but when we're back, we're going to wrap things up with a little bullish, bearish, or BS. So stay tuned. We'll be right back after this quick break.